Hi guys, so today we are talking about one of the most important topic, that is stop loss hunt. And these stop loss hunts are can be found everywhere, because if you are, for example, trading the higher time frame, in the lower time frame these stop loss hunts would be happening, that would be taking you out from the trades that you are entering. So moving back towards the stop loss hunts, I would like to demonstrate that on the uh, real charts, and as well as I would be showing you an example for it so that you can understand. So guys, this is basically a stop loss hunt, which we can see that it was a consolidation here, right? And as the price broke out of this structure, showing that buyers were being induced all around here, and they were thinking to push the price on the upper side. But as the buyers were induced, so market starts selling, taking out all the stops from here. And then as the sellers were induced, again the buyers started coming in order to take out these sellers and taking the price on the top there, right? So for example, if the price is opening around here, so price is closing around there, so it is making a bullish structure. But all that kind of that structure that is formed within this pattern is kind of taking you out. So it is basically like 1 2 3 pattern that is formed in here. Take you to this example, and this is a good demonstration that you can see here, that for example this is a 15 minutes time frame, and here we have a consolidation here, right? So the stop out hunt is used to take out the buyers while simultaneously inducing the sellers into the market, and vice versa. So guys, like see, the buyers actually were induced in here, as we can see that the price was around here at this lower points, and then there was like a bullish candles that was formed. So for example, if the price is opening around here, so price is closing down there, so it is making this candle look like a bullish candle here, right? So as these buyers were induced in this consolidation, so simultaneously the sellers were induced in here, and sellers were about while they were inducing, they were started pushing the price towards the downside. And as the sellers were induced, so to stop out the buyers, and then suddenly the buyers started coming in order to stretch the hands of these sellers so that they can close their positions, in order that they start thinking that they are on the wrong side. So it is kind of the structure we look into the market all the time, guys. This is like one of the most important picture that you should like memorize, that for example, these are the buyers, price started pushing down for the sellers as the sellers were induced, and again the buyers started coming in and taking the price on the upper side. So that's why you just get stopped out, in a sense that you would be saying that yes, we took a buy, but when you see the close of that candle later on, it could be like an hourly candle, it could be 4 hour candle. So you would be looking at that, oh wow, the price has gone so much back up, and you got stopped out. So in that case, you wouldn't be putting a stop loss, and that's kind of like a sin in the trading. You have to control your downside. So further, I would be taking you to a live trade, which I have recently taken on like 29th of this month, October, and I will be explaining you that. So guys, on 29th of October at 10 a.m. New York time, right? There was like a US data that was coming, that is a consumer confidence data, and there was like a job openings data that basically highlights the current monthly jobs opening. So this was coming around like 10 a.m. So guys, coming back to the charts here. So what we are looking at consolidation here, right? And the buyer started coming in the direction, right? So as I showed you, like on at 10 o'clock, right, at 10 a.m. here, there were jobs opening data, and there was a consumer confidence data, and you can see like there was a big wick down there, right? So all those people who were buying around here, right, based on this structure, and all those buyings happening around here, right, they got stopped out here, because everybody who would be buying around here, would be buying around here, would be keeping their stops, or they would be trailing their stops based on this structure, right? And even going up, people entering around here, they would be if they have taken a position around here, they would be like keeping their stops around there, because there were expectations that the price could break on the upper side based on the previous structures, right? But I am showing you like the daily price action based on 15 minutes charts, right? So what really ended up happening, that the price came back down here, right? And as price came back down here, it was an extreme volatile move towards the downside, stopping every person out there who was buying around here, right? So let's see that, for example, like this was a structure. So if you're on like trading on the 4 hour on the higher time frame uh, based on your time frames, or type of the trading which you are doing, so you would be buying around here, right? There'd be other people would be buying around here who are just like on the looking at the lower time frame. They would be buying around here like 3 bar play, and there might be people who might be buying around here after like looking at this pin bars around here, right? And there must be people who must be buying around here, right? And all those people who the price went in consolidation, and then people might be buying around here after the break of this structure, and we got this candle, right? So as there was a job openings data, there was a big stop hunt on the downside, right? So if we compare it with the image which I showed you, right? See, so there was like a buying all around here, right? And then there was like a sellers that were induced because they wanted to do a stop hunt to take out the buyers while simultaneously inducing the sellers, right? And the sellers were induced simultaneously in this. And as the sellers were induced simultaneously in this, so you can see that even those sellers that took these positions around here, the the price came back down there, and again the price went up there, because this wick shows that what this wick shows, wick give us an idea that if the price is coming back down, right? So then the price is going back up there like that, right? And then there was another candle of 15 minutes that was formed here, right? Pushing the, that shows that induction of the sellers, and that shows that the volume based on the supply side is being increased here, right? And as the volume was increased, so to stretch out their hands, or to stretch out the sellers, right? Or to take out all the sales positions that people have entered around here, the masses has entered around here, what the price did, price started going back up again, right? So this was the point where I actually took a position here of the buys based on this concept that all the stop losses which were around there, they got triggered. And as they got triggered and sellers came into the market, and as people started adding their sells here thinking that the price would be going down there, so again the buyers came back inside, right? And when the buyers came back inside, so they started taking the control over, and they started pushing the price on the upper side. So guys, coming back to this picture, so it is the same thing. Like we had a consolidation showing that it is more active towards the buyer side, right? So as the buy started coming in, there was a big sell-off, right? Similarly, the sell-off that you can see in here, there was a big sell-off right here, right? And then buyers again started coming back and started to push the price on the upper side, right? So again, the sellers were induced, right? And as the sellers were induced, then the price started going back up, because there wasn't enough sellers left at that time, right? Because you guys need to understand that when you have like a big candles like that, then these candles are showing the volume that is being increased, but on the other hand it is also showing that the exhaustion is being done, right? So as the exhaustion being done, it is exactly bouncing off from this level, and that level is basically the weekly high of the previous week. So I hope this makes sense. So guys, this is basically the concept of stop loss hunt, that the buyers are induced into the market, taking the price um, taking the price towards the long side, towards the bullish side. And to take these buyers and their stop losses out, the price just goes down, inducing the sellers, and this fake induction of the sellers are put to the exhaustion, and then the buys come back again in there. So I hope guys it make you enough sense, because this thing is happening on every time frame. If you guys would be looking at this daily candle structure, of course the daily candle structure would have been closed on the bullish side, but the idea is that all that happened on the lower time frame, it wouldn't let you sit into the market, because when you would be seeing your PNL, it would be red for a while, but that red PNL can be exhausting if you wouldn't be understanding that what is the context behind it. So guys, take care and have fun.